This is an update on Polygon or MATIC, and you may be wondering why I'm doing an update on this so soon. Well, several of my viewers pointed out to me that my previous two analyses were actually based on the market cap, which is not very useful from a practical investing perspective for you guys. I know the point went well over my head when I got some questions about that in the comment section. Thank you guys for pointing that out, and I've remade this video with the actual price levels, so I expect this to be much more useful for you guys than having the market cap. With all that being said, we have pulled back and we completed our wave 2, and this pullback actually got a little bit deeper than 61.8% support. So I'm putting our major support right at the $1 mark. That's what is being marked with this red line. And then since then, we've had a 5-wave rally up. 1, 2, 3, 4, 5. Looks kind of like a diagonal, which is fine because we pulled back in a corrective wave 2 and we're off to the races in a wave 3. Because it looks like we're already in our wave 3, I'm going to move our support up to 115. So our preferred support would be the bottom of what I'm calling this microsecond wave. As for buying opportunities, I've been reiterating in most of my altcoin videos that as the prices climb, the risk level gets higher and higher for making large lump sum purchases. So I'm not going to explicitly prohibit it here. If you are planning to top off your position, put a little extra cash into Polygon, do it relatively soon. Don't wait too late. From here onwards, dollar cost averaging is going to be your best method for investing while we go up. And that's going to apply to all cryptos, not just Polygon. It's best to diversify not only what cryptos you're in, but also the timing. On the big picture view, this isn't too different from what we had in the previous analyses. I have a structure here that started way back in May of 2019. That's as much history as I have on this chart. And I'm calling this little wave here a wave 1. Then we had a wave 2 pullback. And then we had a really powerful wave 3, small fourth wave sideways consolidation. And then we had a blow off for 5th wave, which of course coincides with the overall crypto blow off top we had in May earlier this year. Since then, we had what I'm calling a wave 2 pullback, major wave 2. Now, interesting thing to point out is that whenever Polygon goes into the third wave, it goes absolutely parabolic. And you can see that here. We have a 1, 2, and then of course the wave 3 subdivides into a 5-wave impulse pattern itself. And you can see how after its own wave 1 and wave 2, we just went sky high after that point. I'd call the 4th wave maybe somewhere in this range, and then we topped up in the 5th wave. So that's something that I would potentially, because Elliott waves are fractal in nature, we may see the same thing here with our third wave. Makes things exciting for us. As with my other analyses, I have a logarithmic Fibonacci extension tool built out here to project our subwave 3, and that should get us somewhere between 486 and 635. If we hit that lower target of 486, that'll give us a 3x return from where we are at this moment. There is a key resistance at the 0.382 extension of the overall structure, which sits right at 627. That resistance has a good chance of serving as the lid for our subwave 3, if not our entire rally. If we do hold on for a sideways fourth wave consolidation, our subwave 5 could go a little bit higher between 749 and 978. Hitting 749 would give us a 5x return. Here too, there are some key resistances in play, one of which is the 0.5 extension at 1285. Hitting 1285 could get us an 8.5x return, and that would fall within a reasonable 5th wave extension range. Beyond that, there is a small outside shot that we can get up to the 0.618 extension, which is at the 2631 mark, and getting there would give us a 17x return. I'm not seeing that as a great possibility right now, but that perspective may change if our wave 3 hyperextends beyond its standard expectations. There you have it with the Polygon price level expectations. Still looks very bullish. After this point, we do expect a major crash, especially in Bitcoin and Ethereum, but Bitcoin and Ethereum's gravitational pull could suck down all the altcoins as well. We could see a major crash-like event here. So that would very likely be a good time to take profits, reallocate into maybe altcoins, equities, or other assets, whatever you want to do. Buy that Lamborghini, all up to you. I won't judge. So bottom line is things are looking very bullish. Dollar cost averaging is the way to go. Best way to keep buying if you want to keep topping off positions as this rally ensues. If you'd like continuing updates, don't forget to subscribe and please like if you enjoyed my content. Until next time, thank you for watching and happy trading.